Good morning. It is May the 26th, 2017, a pre-holiday trading session. That tends to quiet things down pretty quickly after the news is absorbed. Anybody that can start their weekend early does. They run for the back doors, so as the day progresses, I expect the volatility to decrease also. We'll start with our usual disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact of any of certain market factors such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Well, today is option expiration, and the math based on yesterday's option play and the open interest favors a close at 126 for the 10-year and 153.16 for the 30-year. We are in a position for a short squeeze. And you can see it right here. We're in our third day of a rally. So if we break through the 126.12 area and we hold that, then conditions are set for the market to squeeze the shorts. And we'll see if that happens. We have to keep that in the back of our mind. Put everything into context. Do a P split. Go to the longest line of letters and left click. And we've got a P from yesterday. We have a P and the split off of Gobex, and we have a P on a P split. So everything is pointed higher right now. And the issue is do the market makers get caught in a short squeeze? Now that's not life-threatening if they have access to capital. They just roll over their current positions and to the next series, and eventually they get their money back if they have access to capital. If they don't have access to capital, the game could be over for them. So everything right now is pointed higher in the note and the bond. First sell zone is 12 to 16, followed by 19 to 23. We'll start off playing for a trading range. We have a lot of news. The news, if as forecast, is supportive for equities, not so for treasuries. The breakout came from 8. Best support is at the buck to 04. Support could actually be at 8. Don't know. So we're going to try, based on the strong news this morning, to buy 1s to 5s. Try to lean against 126. That's where the mathematical close projects. And buy 2 will be 25 to 29. Lots of news this morning. Durable orders, minus 1%. Transportation, plus 0.4. Capital goods, plus 0.2. Capital goods hasn't made one of their forecasts so far this year. So this number will swing on transportation. GDP, plus 0.8. Second revision. Deflator 2.3. Consumer sentiment 97.6. That could come in lower than forecast. Corporate profits, don't know what that'll be. Last time report was up 22.3%. Very strong number. Baker Hughes rig count come in higher than forecast for North America anyway. 988, 901. So both these numbers could come in higher than forecast. see who's doing all the drilling is not Mexico or Canada. Now, Reg has informed us that drilling falls off pretty rapidly in the spring in Canada because of the big thaw. They can't transport or move their equipment, so we'll see what it is. So the news focus will be durable orders, ex-transportation, GDP. That number would be supported for treasuries, and consumer sentiment. Those would be the three. Okay, looking at the 30-year, the mathematical close is 153.16. Way down there. We'll see if we get it. Number 1 will be 4 to 8, 11 to 15, sell 1, 19 to 23, sell 2. Playing for a trading range, the news, if as forecast, is not supportive for treasuries. 24-28, number 1. 17 to 21, buy 1. Picking up this area right over here. 9 to 13, buy 2. That is possible. Now she's getting a bill too for all this good stuff. But I cannot write this morning. Nothing's coming out correct. Got it. Yeah, Charlie is the puppy from hell, and he's no different than any other puppy. I mean, they're into everything all the time, chewing. It's just that he weighs close to 100 pounds, and that is a game changer. 9 months old, 100 pounds, and he is more than enthusiastic when he goes after anything. So there's a lot of collateral damage. But after after he does something bad, he comes over and he looks at you with puppy eyes, which are a little vacant if you've ever had a puppy, and gives you a couple of big licks, and then it's back to the games. So they're fun to be around. And he's getting kind of funny. He's learning how to raise his leg, and sometimes he's a little bit too far from his target, and he'll try to change his aim point, and he'll lose his balance. So we get tickled about that too. Oh, they're just fun to watch. Okay, 67 to 70, sell 1. 74, 76, sell 2. 60, 62, buy 1. And 55, 57, buy 2. Yeah, crude should be sold today. Find out. Today is the day they'll discover where resistance really lies. And there should be one short, and if it doesn't take out the overnight high or yesterday's lows, then we'll go into consolidation. Trading range. Interesting comments yesterday about Germany's automobile export game. When things are manufactured for export in Europe, they're not taxed. And so that gives them an advantage to export automobiles. Now, Germany's Volkswagen and BMW have manufacturing plants, facilities in the United States. I don't think Mercedes does. That's one way to get around that problem. So, I mean, all this stuff is so intertwined. I mean, if you really want to have free trade, just have free trade. And there is one place in the world to make straw brooms. There is one place in the world to make something. And let that be. Okay, looking at the euro, it is pointed lower. We had our first buy last night at 1200. That's pretty good support. Buy one. 1175, buy two. Do like the short side of the euro better. And you can see it when we get these 2-day rallies, 1, 2, find a place to sell it on that third day. So we're still working our way lower. 12.15 to 25, sell one. 12.40, 12.50, sell two. I see a trading range here. If the numbers are as forecast this morning, our economic numbers, it's not. That should bring in selling into the euro. Okay, looking at crude oil. The day after a huge big sell-off like we had yesterday, crude tends to find a trading range. And we have resistance at 49, 49 and a quarter. And yesterday we left wanting to sell 48.75, 49, or 49 and a quarter, 49.50. So we caught one side of the market. We're at 42 right now, so we'll keep that 48.75, 49, sell one, 49 and a quarter, 49.50, sell two. On the buy side, we had 48, 48 and a quarter, buy one, 47.50, 47.75, buy two. I'm looking for a pause consolidation day today, and we'll see if we get it. Okay, the EMini, the tendency is into 3-day weekends is to rally the market. It doesn't happen every time. It can sell. June 30th close is much more important than a May 31st close for the market. It's not the end of the month, so we do have a little wiggle room here, but typically they don't want the retail account fretting over their account for 3 days in a row. They might come to a decision to sell or liquidate some of their stocks, and the retail account is the final destination for stocks that are being distributed by the big boys. So that's where we find ourselves. Okay, I'm guessing at 2400, 2405 is support, and 2415, 2418 is resistance right now. Would tend to close near the high end of the range, but even if we close near the low end of the range, we'll be closing on new contract highs, so I don't think anybody's too worried about it. 14 to 17, sell one. 19 to 23, sell two. I'll let them get stops above 20. 5, 7, buy one. 24 even, 2402, buy two. Durable orders, minus 1%. Ex-transportation, plus 0.4. Capital goods, plus 0.2. Capital goods hasn't made their numbers once this year, in my memory. GDP, plus 0.8. Deflator, 2.3. Stagflation, folks. Looking at it right there. Corporate profits, don't know, was 22.3. Big number. And I think most of the stuff I've read is that corporate profits are doing pretty well. Consumer sentiment, 97.6. And Baker Hughes 988. Both of those numbers could come in higher than forecast. 901. Focus, durable orders, ex-transportation, GDP, consumer sentiment. Okay, it's going to take a bit to get everything up. I'll do it. I'll be back with you as soon as possible.